Have you ever felt like there's some secret wisdom about money that no one is telling you? Like the financial experts are holding back crucial information that could transform your finances forever? Well, you're not alone. In this video, we're going to reveal 11 surprising truths about money that most experts won't share. Let's get started. 1. Money is an emotional game. You might think that managing money is all about crunching numbers and making logical decisions. However, experts know that our emotions heavily influence our financial choices. Fear, greed, and overconfidence, they can all lead us to make impulsive money moves we later regret. For example, studies show that many investors panic and sell their stocks during market downturns, driven by fear and anxiety. But then, when the market inevitably recovers, they miss out on the subsequent gains because their money is stuck on the sidelines. Understanding your emotional money triggers is key to making smarter decisions. Maybe you tend to fear missing out on hot investments, so you put money into risky bets. Or perhaps you get overconfident after some wins and start throwing money around carelessly. Recognizing your emotional patterns lets you implement guardrails to protect yourself. 2. Index funds beat Wall Street's Brightest. The financial industry wants you to believe that their high-priced money managers and complex funds are the path to riches. However, research shows that over 90% of professional fund managers routinely underperform simple, low-cost index funds that just track the overall market. Legendary investor Warren Buffett advises average investors to simply buy an S&P 500 index fund and essentially match the market's performance. The more active trading and fancy strategies a fund employs, the more it costs in fees, and the less you get to keep off the gains. 3. Your emergency fund is more vital than investing. Before you start chasing hot investment tips, make sure you have a sturdy financial safety net. Most experts recommend keeping 3 to 6 months' worth of living expenses stashed in an emergency fund. That way, you can easily cover unexpected costs like medical bills, car repairs, or sudden job loss without derailing your long-term money goals. Studies show that nearly 40% of Americans can't afford a $400 emergency expense from their current income or savings. Having that financial buffer gives you options and prevents you from being forced into racking up high-interest debt. Don't neglect this critical foundation as you pursue investing. 4. Some debt can be useful. We're taught that all debt is bad, but the truth is more nuanced. Certain types of debt, like reasonably priced student loans that increase your future earnings, or a mortgage that helps you build home equity, can be leveraged to your financial advantage when managed responsibly. The key question is whether the debt gives you a positive return on your investment. Taking out low-interest mortgage or student loan debt to increase your net worth over time makes sense. But piling up maxed-out credit card debt just to buy depreciating consumer goods, that's the type of debt you want to avoid. 5. Insurance is a crucial financial shelter. No one likes paying insurance premiums, but the right coverage is an essential umbrella protecting you from life's financial storms. Think how ruinous an injury, illness, or untimely death could be without disability insurance, health insurance, or life insurance. An ounce of prevention is worth it. While insurance may seem like a grudge expense while you're healthy, it can be a lifeline if disaster strikes. Making sure you're properly covered gives you the peace of mind to focus on other financial priorities. 6. Compound interest is magical and dangerous. Albert Einstein called compound interest the eighth wonder of the world because of its immense power to build wealth over time. But it cuts both ways. While it can exponentially grow your investments and savings, compound interest is just as merciless when rapidly inflating debts you can't pay off. Just look at the math. Investing $300 per month at a 7% annual return means you'll have over $1 million after 40 years thanks to compounding. But leave a $10,000 credit card balance outstanding at 18% interest, and it balloons to over $150,000 after that same 40 years. Harness this force wisely by paying off all toxic high-interest debt ASAP, while maximizing compound growth on the investment side through consistent contributions and reinvested earnings over decades. 7. Your financial plan needs regular tune-ups. Your financial situation is fluid. Jobs change, families grow, goals shift. But too many people set their money plans in stone, then wonder why their strategies don't keep working years down the road. Experts know you need to review and adjust your financial game plan periodically to keep it optimized. At a minimum, you should review and rebalance your plan annually. But any major life event like a new job, getting married or divorced, having kids, or receiving an inheritance means you should reevaluate sooner. Don't let your plan go stale and fail to serve your needs. 8. Budgeting isn't just cutting costs. The B word makes many people cringe since they associate budgeting with deprivation. But a healthy budget, properly done, isn't about sacrifice, it's about being intentional, so you can afford the things that matter to you. Think of it as a spending plan for your priorities. Start by tracking where every dollar goes for a few months. Then categorize your expenses between needs, wants, and savings/debt repayment goals. Most experts recommend allocating around 50% for needs, 30% for wants, and 20% for paying yourself first. But you can adjust based on what's important to you. The key is being proactive and purposeful with your money, not just letting it slip through your fingers mindlessly. A thoughtful budget empowers you to make room for joyful splurges guilt-free. 9. Financial security has psychological payoffs. Sure, being wealthy gives you more financial options, but experts understand that simply feeling financially secure and in control of your money has tremendous mental health benefits too. Chronic money stress is linked to anxiety, depression, and other psychological strains that no amount of riches can cure. When you don't have to perpetually worry about keeping a roof overhead or making ends meet, you free up an amazing amount of brain space and emotional bandwidth. Reaching a point where you feel financially stable and on track toward your biggest goals provides an incredible sense of confidence, clarity, and peace of mind. 10. Investing in yourself yields the highest returns. You heard it before. Your biggest asset is you. Continuously developing your knowledge and skills through education, training, and staying healthy is one of the surest investments you can make. Over time, these human capital investments tend to pay much higher dividends than any financial product can. The wage premium data is striking. According to research from Georgetown University, college grads earn 84% more over their careers compared to high school grads. And that doesn't even account for the exponential career growth and trajectory improvements often unlocked by investing in your potential. 11. Not investing can be very risky. Keeping all your money sitting in savings feels safe, but it's quite risky, thanks to inflation steadily eroding the value of your cash over time. Not investing means losing purchasing power year after year. Sensible investing is the only way to outpace inflation and make your money grow in real terms. Sure, price stability makes sitting on piles of cash seem harmless. But look at the numbers. With 3% annual inflation, that means your purchasing power is cut in half in just 24 years if you don't invest. Strategically putting a portion of your savings to work in income-producing assets protects you from this wealth erosion. There you have it, 11 money truths the financial experts usually leave out. Apply this wisdom to fear less about money, earn more by investing wisely, and keep more of what you earn through smart planning. All that amounts to a vastly improved financial future just by seeing what others don't. And if you found these insights as mind-blowing and wallet-growing, don't forget to like this video, share it with your friends and family, and subscribe so you never miss another wealth-building secret.